Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On the show today, we are going to talk about what the action in bonds yesterday means for the stock market today. We have a merger to discuss in the technology sector. We have a Snapchat finally below $8 on a couple of analyst commentary notes there. Citigroup and Evercore on Snapchat. We have Eli Lilly with some very good drug data this morning is trading higher off that. So a lot of news to discuss. Our guest today will be JC Parets. He will join the show at 8:35. He is the author of AllStarCharts. Before we get into the show, I want to remind you folks that the Benzinga FinTech Summit is coming up November 14th in San Francisco. I have a new deal for you folks. If you go to bzsummit.com, enter the promo code PMPVIP, that's as in pre-market prep, very important person, PMPVIP, you will get a free ticket, but I'm told we only have a handful of them left. So bzsummit.com, PMPVIP is your promo code. You get a free ticket November 14th in San Francisco. Also, it has come to my attention that some listeners of the show have no idea what Benzinga Pro is. So I pulled some strings and I got a special discount code for listeners of the show, because if you are a trader who trades off the news, you need Benzinga Pro. It's got real-time news. It's got the SEC filings, real-time press releases, Squawk. It now has chat room and real-time quotes. So if you go to pro.benzinga.com and you enter the promo code AMPRO, that's Alpha Mary PRO, you will get 25% off a essential Benzinga Pro package that I'm told it's good till the end of the month. So check it out if you haven't already. That's pro.benzinga.com, promo code AMPRO. On that note, Joel, what is the word in the overnight markets?
All right, S&Ps are in the red by 10.5 handles. Spiders led for a change here. They declined between 5 and 6 p.m., induced a lower open in the SPOOs. So 26.25 is your pre-market high. That's just above Wednesday's low. So that's a target on the upside. And then the close, I mean, if we go green today, 29.3150, it'll be a very, very impressive day for the market. You have Bitcoin just hanging out here at 6,500 once again, up $102 at 65.30. Crude hanging out in the 76 handle. Can you believe that? Made a high yesterday in crude, right near 77. So, folks, hard to give you some numbers. Just use the half and whole numbers if you're lucky enough to be long. 76.90 yesterday's high. Gold getting a little boost up 350 at 1206.30. And silver up a dime at 1477. Dennis, a little red on the screen today, except for the banks. And, well, a little jittery about rates, huh?
Yeah, TLT, absolute collapse for that yesterday. It continues here this morning. So rates flying, bonds dying. That was the story yesterday. That is the story again here today. That is why you saw strength in the banks yesterday. That is why you see continued strength in the banks this morning, despite the SPY obviously being down and the S&Ps being down 9 handles here. So banks are the story, really, if you're looking for a good story here today. But I don't know what's going on with the TLT. They've just decided that rates are, or at least long-term rates are flying here right now. So when you see a move like this, I mean, this TLT move, put it in perspective, go to your weeklies, go to your monthlies. It's been a long time since we've had a fall like this. I would say February 2nd, we had a pretty good fall, that first week in February. But really a 2-day move like this to fall, like, you know, say, okay, well, if you guys are used to trading your NBEVs and stuff, you think of what's a 1% fall. A 1% fall in your bonds is significant. So, you know, this is TLT typically trades 30, 40 cent ranges. When you see it fall in 3 points in a day and a half, That's significant, and that's going to spook a lot of different sectors. I mean, you're going to see some of your REITs trading down here this morning. You're seeing your utility stocks trading down, and obviously the obvious beneficiary to that is the banks, and the banks are trading slightly higher. SPY weighing on it a little bit, but the TLT is helping, or more than the SPY is hurting it.
Down another $1.41 in the TLT here. It was funny. It was kind of strange reaction off the rate hike last week. Actually, the TLT hung in there, but that had been a long time support level that we took out, and that support level was at the 116 area. We are now $2.50 below that basis, the TLT. So until we can get back above that old low area, going to be pressure on the market. It's good for the dollar, but it's really hurt some of the European bourses and the overseas markets, and things really open up here in the TLT. I mean, I don't want to say we're going to go down to par or anything, but 106, 105.5 was major area support here. But they say the market could still rally with interest rates going up, and we've been able to hang in here. But this is a concerning move in the TLT.
I mean, you can see some individual REITs, a good one coming from Fuzzy here. Look at SIR. This thing get murdered yesterday. I'm not sure if there's a side story to this one too, but getting murdered here again this morning is down another 70 cents here. And when rates start flying up, this stuff is going to start getting the beats. So REITs and spinners giving it good, REITs, utilities, which we talk about all the time, home builders. We saw Lennar give it all back yesterday. I mean, your autos are ground zero when rates start going higher because people aren't buying cars as much if the interest rates start to climb. So, I mean, you see all this stuff. General Motors cannot hold the gains there yesterday. I mean, it's tough. So you've got to look, what affects, and everything is relationships. Like, this is what we talk about in the show a lot. And this is how I made my living for 19 years, is understanding the intricate little relationships and trying to get ahead of that trade. So, and that's why I look at the TLT every single morning when I start my day. One of the first things I look at is the TLT. And when I see it weak, I know automatically stocks like the REITs and the utilities are going to get weak, and stocks like the financials or the banks specifically are going to be strong. So I think it's starting to spook the market overall here, though. So, you can say what's the catalyst for yesterday afternoon sell-off and today's sell-off. We've had a little bit of risk off coming. Some of the higher beta stuff got hit early morning yesterday. But I think, when you see the TLT falling like it is here, it's going to spook a few portfolio managers. And some money managers are maybe potentially saying, hey, if rates are going significantly higher here, that's really not good news for stocks overall. So maybe I'm going to book some profits. And I think that's what we saw yesterday. There's rumors, it was a bad algorithm selling off yesterday afternoon or this morning. Give me a break. It wasn't that big of a sell-off. It wasn't an algorithm. It's just flat out profit taking. I mean, we just hit all-time highs. So what are you talking about sell-off? The Dow Jones Industrial Average peeled off those highs yesterday afternoon. And yes, we're falling a little bit again here this morning, but this is not significant. But if you were a portfolio manager and you're seeing, since July in the Dow, or let's look at the S&P because it's a better indicator we always use. You're up 200 points in the last 2.5 months. Why not book some profits here? Why not? You're seeing rates fly up. You're seeing some nervousness here. You're seeing issues here, and I don't know. There's a few reasons to book some profits. So I think yesterday's selling was nothing more than some profit taking. I see it here again this morning. Does the uptrend continue? I don't know, but if I was a money manager, I think I'd be building a little more cash if I was fully invested.
All right, just real quickly, I did want to mention the AMD. It had a big sell-off off the open. Also, Square had a big sell-off off the open. And that's when your big liquidity comes in. And, not only on that opening print, but, some big funds are just saying, okay, I've had fun in AMD. I want out, and get me out in a hurry. So they give them 2, 3, 4, 5 million to sell even after the opening bell. And, they give them an order, sell me 10 million down to 26.5. And that's what they do. They take it down there. And then, all the buy the dippers come in midday, and you have these light volume rallies. And then the big money just comes in, at the end of the day and just pounds them again. So, be careful here. A lot of important support levels. We're taking out. Keep your eyes on the close on a day like this. If if you're stuck something long and you're hoping to wiggle out of it, unchanged. It depends if there's specific news on this stock, but a lot of people will be looking to get out unchanged on the session.
There is some specific news on a few stocks here this morning. Let's go to the earnings calendar there. And Constellation Brands, I think they just wanted to buy this thing no matter what because it's got the pot exposure now. And obviously, we've seen some pretty good runs up. They hit it originally, but it had come back in. So it's getting a nice pop. It's up 11 points here on their earnings. Is coming up that resistance level around 220. Let's see what it does there. But Spencer, Israel, how are the numbers?
Yeah, coming in this morning with their earnings, Q2 EPS $2.87 versus a $2.60 estimate, so a 17-cent beat there. Sales 2.3 versus $2.25 billion, so they beat the estimate on both the EPS and the sales for the last quarter. And as far as their forward-looking guidance, they raised their fiscal year EPS guidance to a range of $9.60 to $9.75. So a guidance raise plus beating the estimates on both numbers in the last quarter. That's all good news.
It's a nice lift. The only bad news is that 220, we've been over it. We got up to like 222 just a few minutes ago. We're back under 220. That's where I see all those tops just under 220, 219.60, 219.43, 219.13. Let's see if we can get up through that area. If we can't, this could end up, being one of the fades. And we have seen a lot of these gap up in earnings in the early morning fade. We saw it with Lennar yesterday, I believe it was. We actually saw it with GM. We saw it with Alcoa yesterday. So some of these stocks that have been out of favor that get the overnight lift on a good report or a good news headline do often find sellers here again. So I'm not sure I'm chasing it up here 4.5% here, especially in a down tape. But I don't know if it's going to be the one like Lennar. This isn't as much interest rate concerns here in this. And I think that's the main reason why Lennar got hit yesterday. And I think also that's why GM couldn't hold the gains too.
Okay. Constellation Brands. I mean, you got to think about, their appreciable, their stake in Canopy Growth is definitely, yeah, that's definitely.
I think that helps the sentiment towards the stock. And well, like I said, sentiment, I believe, trumps all. So, I mean, you can have great numbers, you can have bad numbers, but if the stock is viewed positively, in every earnings report, you can always find a silver lining. And if they want to buy the stock, they'll find a reason to buy the stock. And if they want to sell the stock, they'll find a reason to sell the stock. So I still think sentiment trumps all. I feel like it's turned towards us a little bit. I mean, they hit it on the initial investment because it was a big investment. But really, when you think about it, they bought pretty low on that canopy. And when they put the investment into the thing, and it's been straight up there since. Pot stocks are resilient here. I mean, really, yes, we've had a little bit of a sell-off in a few of them, but they've kind of held up. I mean, the Tilray 300 was just silly. So, I mean, you got to, and yesterday was resilient too, and not a great tape. CGC bouncing back up. So, I don't know. I don't know what to say about them other than that. They're kind of still in the middle, and it's still big bull bear debate here right now, especially on something like NBEV, because we've been down near 3 or 4, we've been up near 9 or 10 a couple times. We keep crawling our way back up on NBEV to that 9-10 area. Eventually, we're going to take it out. Wow. So I've said, I've been on the show the last few days, and I think the top is in. I'm starting to pull back on that call here because I look here and it doesn't want to go down. So when stocks don't want to go down, maybe that FOMO is going to drive this higher here again. So if you're missing out, traders are still interested in this thing. It gets above 10, it would be in breakout mode again here. So on watch list NBEV.
Yeah, 650 gave you a shot there. 3 sessions in a row. Yeah, it did. I mean, it said, come on in. The water's fine. And, so if you were picking it up down there, as you mentioned, you hit $10 one day in the pre-market, $9.99 in a regular session. So that would signify another breakout. Just wanted to figure up on Constellation Brands. I'm really glad that it went up because someone in the chat, I don't know who it is, has just been pounding the table on this stock for weeks.
Nice job.
I was very worried if this thing went down 20 points. But anyways, it did it. It made a pre-market high of 223. We backed off to 220.50, still up 975, 4.5%. I keep a real good eye here on 222.22. Remember the showroom 222? Do you remember that one, Spencer?
No, you're dating yourself. Spencer's shaking his head at you. This is something from the 50s.
No, it's not. Do you remember that show, Dennis? Room 222?
No, I'm not. I wasn't born in the 50s.
This is at 50s. Come on, Spinner. Help me out here. That was a
He's looking for somebody else.
Spinner's going to help me out.
Spinner's too busy trading NBEV. He's not talking.
222.22. That's my number there. Someone's going to help me out.
Yeah, well, it did premiere in 69.
Okay.
So he was only off by a decade. But
Okay.
69 to
That
70.
was 7 years before I was born.
Yeah, well.
Early 70s.
20 years before you were
That's a
born.
good show. It really was. But anyways, how we digress here. All right, let's move
Oh,
on.
we do digress sometimes. Okay, so let's move away from earnings. I don't care about Pier 1 imports. I know
Come
it could, but
on, wicker chairs.
I can't even talk the pod, the whatever it is, the wicker store company there. Moving on. Unless
it's at
somebody really wants to talk about
$1.40
Pier
now?
1. I don't. There's better stocks talk. I'm only on until 8:30 today. I leave early
Okay,
today. So
let's
I want
move
to get
on.
you can talk Pier 1 after I leave, but I don't want to talk.
You want to talk Snap?
Yeah, let's go talk Snap. That one's fun.
Yeah. All right. Some commentary this morning. Hearing that Citi and Evercore both cut their price target to $7 on Snapchat, and it is finally it is below $8 this morning.
It's ugly. The trend is not your friend here. I've been bearish Snap for a long time. Obviously, I tried it long. I said that back when it was consolidating for a long time between 13.5. I've sold it when it cut out through that 12.5 low. So glad that I cut that loser because this has been straight down ever since. It's $7.84 here now. Instagram killing them. The user base is not, it's not growing. I don't know what the story here is. I think all rallies to be sold. I said that last time when the stock was at 10. I took some heat for saying it. Well, now it's at 783. I think the trend is still down. I think rallies to be sold. I'm not selling short in the hole. It's moved a long ways here, but every time we get a hope lift, I think it's a selling opportunity.
Yeah, it's just like a slow death on this one, isn't it?
Yeah,
And,
they never made money. I don't know. The Instagrams come out. Everybody, I don't know who's using that Snapchat. I remember it was like the hot dog they had, and you could put little puppy dog ears on your thing, which Joel would look cute with puppy dog ears, maybe. But I mean, seriously, here, this is just not the stock that I want out of my investment portfolio.
I'm still learning how to use all the emojis. Do you know how many emojis there are on an iPhone to choose? There must be like 300.
I don't know what not anyone mean. I've sent an emoji to somebody and they get offended because I probably sent the wrong one. Anyways, what do you think? Snap here? I don't know what to tell you. Citi bearish, $7 price target. I think it's conservative. My price target's $5.
It's 780. That's your pre-market low. Trading at 786. More room to work on the downside here. And let's see. What do you need for a gap fill? This game resistance at 813. That was the low from yesterday, and don't think we'll see the close of 823.
All-time lows. When all-time stocks making new all-time lows, I always say you got to go. This is now taking out the $8 low from 2 days ago here. There's just no reason. There's no reason to be long this, and ask JC Parets later. His trend is your friend. He's a trend
don't ask JC
guy.
about this stock. Oh, my God. He'll yell at us for sure if we ask about this stock.
Well, until this thing can get back up over 9.5 and show me some life, show me a reason to buy it here. I don't see a reason to buy this. So anyways, not interested in SNAP. Jumping over here, a lot of news here from the individual stocks this morning. We got good data from Eli Lilly. That stock, it's got to be getting close to its highest back from 2000. Where did this get to? And, this shows you buy and hold works if you hold for 19 years sometimes. But Eli Lilly, where did it top out back in the year 2000?
Boy, oh boy, you're going to be licking your chops on this one here. No, it took it out.
Are we higher? Are we all-time highs on Lilly?
Yeah, in June of 2000, it hit 109. And
we're over it.
And then we hit 109.60 yesterday.
I'm kicking myself here because I had this on. I've talked about this on the show. It had been consolidating for a long time, 105, 106. And I kept scalping out of it. And I take the little profits and I should have just stuck it in my long-term investment portfolio and not looked at it. I originally owned this in my investment portfolio at 35. It ran to 80 over the next 2 years, and it was over a double for me, and I sold it all. I wish I would have held it. It's kept going, so I wish I would have held a little piece anyways. 112.5. What's the data, Spencer?
Yeah, the data was for a drug for type 2 diabetes. I'm not going to try to pronounce it, but the point is they met the primary efficacy endpoint in a phase 3 trial, which is always more important, or sort of the last major hurdle. I'm not going to say more important, but the last major hurdle a lot of times to FDA approval is at phase 3. They met the endpoint there, so that's great news for the drug and for the company.
It's a big pop here for Lilly. That's a big move here overnight, taking out the 110. I'm going to go look at the book, Joel. I guess when you're at all-time highs, it's hard technicals, but I guess buy or pullbacks?
Up 488 and 113.50.
Big move for Lilly.
On 12,400 shares, Dennis?
But the problem is this is all-time highs. I
Okay.
hate shorting stocks when making new
I'm
all-time.
not
Just like I
saying
hate
short.
buying stocks making new all-time lows. I hate shorting stocks making all-time highs. This market is Momo. This has been itch
Yeah, I
to
know.
break out. And here it is. So I don't know. I think you get pullbacks here back to 110, 109. I think you got buyers all over the place, and it's all air above. So no, I'm not shorting it.
I'm not
Am I
saying
buying it up 4.5?
Nope.
Maybe not, but I'm not short, and you can have that short.
I'm not shorting it. I'm just saying I just don't think it's going to open at 113.50. It could.
It's got 110. I see 20,000 shares at 110 in the book to try to hold it down a little bit there, but we're heavy bid at 112.50.
Okay.
We're slowly trading. We still got an hour 10 before the open. I don't know where.
We'll see.
I think it's going to open well over 110.
I just think look at it, just fell 70 cents on that, Dennis.
It's a spread. It's 112.50 to 113.50, so it's just sitting there.
I mean, come on. What if you're at like a fund and you're like, I'm going to sell 50,000 at 110 tomorrow. I'm going to take off part of my position. You see it trading at 390, up 390 at 112.50. I mean, I'm not, maybe I'd be more inclined to try and catch a low bid, off the open. Maybe, some institution keeps it down off the open. It's hard. I mean, how much stock does it take to move Lilly? I know it's news. I know it's drug news. I just think, I don't know, what's your pre-market high? You just heard 113.50. Is that the pre-market high? That's my number. That's a good number. It gets above
that. It's a big move for the stock. Yeah. I'll give you that. And it does take some stock to move Lilly. But I just think it's been waiting for a catalyst, and here it is.
What if you were long on an overnight trade?
I'd be holding it actually. I think if I was long, well, I don't know. Maybe if it's a day trade, I mean, it's not an overnight trade, I'd sell the hell out of it. But if I had on for a swing trade, here's your catalyst, here's your breakout. Yep. I mean, you could look at this thing a month from now, it could be 125. So big pharma is still hot too. I mean, you can talk about the weakness we've seen there, but look at Pfizer breaking out yesterday. That's got to be a lot of years of highs there too. I don't think we're back to the highs we were in 2000 on Pfizer, but you look here, $45. You want to talk about a level here, and if you just want to talk pre-market stuff here, $45, 270,000 shares for sale there in the book of 45. So your first level to take out on this is 45 before you can get too excited there. It's like every point. 46 is 150,000. I can't see quite to 47. But 45, 270,000 shares. That is huge size. So can it take that out today? Maybe. It's getting ready to start, but the weak tape here isn't going to help it. And then Merck actually had an ugly candle there yesterday, just pulled back a little bit with the overall market. But it's been moving up there too. So, I mean, these big pharma stocks, I own Merck and Pfizer in my long-term investment portfolio, two of my biggest positions there. They've been really good ones. The big pharma's in favor.
All right, just real quick here. That order is at 45. Has been in there since March of 2001 when you had a 44.98 high, and that was the start of a big decline. Prior month's high was up at 46.71 and 46.75. So big number at 45, needs to rally 50 cents to get there. So your average daily range in that would be getting near the top of it. No, it's been moving a lot lately. All-time high, 50.04. That was in April of 99.
Let's talk this SAEX, these little movers here from last night. It's giving it all back here, but last night, Joel, give us the highs. Spencer was saying this really traded high last night. I don't know what the headline was, but something drove this up after hours. What do you have for an after hours high on this SAEX? And show the after hours chart.
Yeah, I'm pulling it up.
32.80.
Is that for real? Did this really hit 32, or was it just like some off exchange? It ran up there?
Yep.
On volume.
100,000 shares traded in that 15-minute bracket, and 100,000.
What happened here? And I mean, this stocks, you got to watch these low flow things. They can just go insane. Like it did this a week and a half ago there too. But holy cow, look at that candle. That was from last night. That's last night. It went from $10 to $32 last night and then gave it all back.
Correct.
What?
And the news, the news is that they won $100 million contract, a marine project.
They got they actually might have some sales
in South Asia. So
why did it give it all back?
Because
the whole thing.
Because the flow.
Because it's SAEX and that's what it does. All-time high in SAEX. This is like Dry Ships Part 2, like $40,000 a share. Probably the same thing with death spiral financing. I don't follow it closely enough, but a lot of these stocks.
There's 1.7 million shares outstanding. So
there's like no shares outstanding.
That is why.
This low float stuff is prone to these little intricate little short squeeze or violent pops that quickly give it back. I don't know if I've ever seen one that quickly give it back.
No.
Stock triples in 15 minutes, an hour later gives it all back. I don't know if I've seen that one before too, but I don't know, whatever algorithm bought that thing up to $32 last night, they're shutting that algorithm down in a hurry. That's a good way to just burn cash. SAEX, wow, what a move last night, but it's all gone.
Well, you know what? This had a strange move too.
A week and a half ago.
Yeah.
Same thing.
Be careful.
$7 up to 32, and then gave her all back in the next couple days.
32 is good resistance, Dennis. Dennis, I'll go 10 steak dinners. This doesn't see 32 today.
I want to kind of buy it. It's got all the support.
I know it does. It does.
It's done it twice already. It went 10 to 30 overnight. I guess you just buy it at 10 and throw your order at 30 and hope for the best. But if you hold it over a week, it'll probably be a 5 and 2 and 1. It'll HMNY you. So you got to be careful with these things. They have these little violent spikes, but then HMNY, we know what happens with that. So it does a reverse split or does more death spiral financing. Thing opens down 50 or 70% the next day.
Watch out for 40,500. That was
major resistance at $40,000 in this.
Yeah, I get your order in at 39,999.999 just to get ahead of the high frequency traders.
Question from the chat: how do these stocks like this decrease so much and increase so much? Well, low floats can go all over the place, but these things typically have, and I don't know the specific story, so take it with a grain of salt. But if you use dry ships, for instance, which was the classic player in all the shippers, it's the death spiral financing. So what that is they issue stock to basically finance themselves, and they issue it they issue more debt that's got a convertible into it, where they can convert at less than what the price of the stock is. So you're always diluting the hell out of everybody, and you're taking shares away. Then they do the reverse split, they do the death spiral financing again, and it's just they have no other way to raise money. So what that does is just continuously burns shareholders. So they reverse split it, bring it back up. Now, Dry Ships hasn't done that for a while. I think they actually had a contract too. So they haven't done any reverse splits for a while. I remember Dry Ships was doing a reverse split, seemed like every other week.
Yeah.
So they haven't done that lately. So I think that's why the stock's actually held up. But when these things do these reverse splits on these financing things, it's usually, really bad news for the equity holders. So they haven't done one for a while, but I mean, all these things are just ticking time bombs for the next round of, death spiral financing or, whatever they have to do to raise cash. So, but when you get an actual contract, that means they may not have to raise cash for a while too. And that's why I see sometimes these explosions when they get a contract. But anyways, I don't follow the story close enough to know, how many times, but when I see a stock at 40,000, I'm assuming there was a few reverse splits in there where they've had to do some financing at the equity holders' expense.
Yeah, and Peter, SAX, not many shares outstanding. How do the short sellers borrow shares with that low float out there? They pay a lot. They pay a high rate is what they do.
They pay a lot.
Yeah.
I mean, that's what they do. And they have to issue, this convertible debt in a lot of cases, which is convertible way below. So they reverse split it. And obviously, there's debt holders that can buy the stock way less than that, and they can sell into these spikes in price when you get those too. So there's a lot of funny things that happen in this stuff. Most of these companies are just surviving just because they keep burning the equity holders to stay alive. I mean, they don't have any other options, I guess. So if they didn't do this type of finance, they'd get no financing, they'd be bankrupt. So they're trying to stay afloat, no pun intended, on these shippers to be able to, at the expense of the equity holders.
All right, it's 8:29. Dennis, you unfortunately have to.
I'm going to give you the imbalances, and I got to take off. I got a lot of stuff to do today, so I'm going to leave you early. But JC Parets after. Is there any other stock you want me to cover before I leave?
No, I think we can handle
Western Digital. Yuri asked what you thought of Western Digital.
I've got a swing trade on it right now. I might get stopped out below the 57. I just see these 4 lows. It's looked good a couple of times, but it's not going. So I don't know. I'm probably going to get stopped out here today. My stop up is below $57. So I was trying to just play for a swing trade. It was starting around a little bit. We had some interest in Intel. I thought the rising tide might bring up Micron, which it did for a day. Applied Materials, LRCX. Western Digital, Seagate. So I put on a couple logs in a few of these. Seagate's trying a little bit here, but I don't want stocks making new lows here for the the last couple of weeks. So if Western Digital starts taking out 57, I'm gone.
And boy, oh boy, 1, 2, 3.
This is a weird chart.
5.
Look at this chart. It's just same range.
Yeah, I know.
Yeah,
It's
it
holding
is.
on.
It's really
so until it breaks either
good.
way.
Yeah, that's a good.
I
good
know it's really
point.
weird. Look at that. That's the accordion. Look at that chart.
That's weird.
I should have just been buying and selling 57 to 59, 50 or 57.5 to 59, 57.80 to 59, 57.80 to 59. The accordion chart, Joel.
Yep.
That's your favorite formation.
Any notable imbalances?
AT&T 143,000 to sell. Remember, AT&T can trade like a bond. You had a little bit of a value trade going on yesterday, so some of these stocks did hold up. GE 232,000 to sell. Or it looks like our GE sell and balance guy is back here once again. Square small buy and balance 34,000 shares. I did sell that Square open yesterday. It was a good one. I sold the Roku open yesterday. It was a good one too. I'm not sure I'm doing that here again today. I might. Well, we'll see. But like I said, I got a lot of stuff going on today, so I'm not going to be trading as much as I normally do. That's pretty much the bulk of them. You do see a few sell balances in the banks, but I expect those to go to buy if the TLT stays down.
Okay. All right. Well, we will let you hop. I'm sure you'll be listening to the show on your phone.
So good luck, everyone. I'll be back with you for the full hour tomorrow.
All right. While he's out, before we grab JC Parets in a couple minutes here, let's cover this merger we had this morning.
Let's do it.
Cloudera, CLDR, or actually it was yesterday after the bell. Cloudera and Hortonworks HDP are merging. Hortonworks shareholders will receive 1.305 shares of Cloudera for each share of HDP that they own. So first, we'll look at CLDR here.
And boy, this stock, I remember this got killed a while ago, and it was earnings or guidance or something, and it traded down to 12.57. I remember said something about 13 or whatever. This won't stay under 13 forever, and Dennis got mad at me, and that turned out to be the bottom. I think some people in the chat were on this one, so let us know. I mean, nice pop up here. Your pre-market high is 2180. Hit 2170, 2180 a few different times. So a seller lurking up at that level takes out the former high of the move at 1854. And then look on your monthlies too. If you get looking for more on this, if you get up into the lower $22 handle, 22.22 and 22.43, those are your highs in April and May of this year. But first things first, you got to take out that pre-market high of 21.89.
And then Hortonworks HDP.
Oh boy, synergies here. I mean, no one's really it's a merger, so it's looking like it's good for both companies. This one got a nice pop up to into 28 handle. It looks like we got the 28.40. We're backing off. We've given back $2 off that. Important level for me would be $26. You had a high at 26.22. You're still staying above that, so I'd like to see it hold that level. Kind of was sleepy in $22, so nice windfall here. These stocks, they like it for both companies, so we'll see if they can hold on to these gains.
All right, 8:34 here. Let's take a quick break, and we're going to grab our guest for the day, JC Parets. His firm is AllStarCharts. That's where he's just ripping through charts all day, every day. So we'll be right back in a moment with JC Parets. And welcome back, everyone. Pre-Market Prep, Spencer Israel, Joel Elconin, now joined by JC Parets. He is the author of AllStarCharts. JC, how's it going today?
It's going great. Thanks for having me again, guys. We've been doing this for how many years now?
Longer than I've been here, that's for sure. Joel.
I would have to say
4 years, maybe
13 or 14.
More.
Maybe. Yeah.
5-6 years, I think.
Wow. All right, it's been a minute. So what's on your radar these past few days, past few weeks, JC?
Bonds are getting crushed. Rates are just absolutely ripping. And I've sort of been in the camp that it's a sort of a scarcity of assets kind of market. And if bonds are going to get crushed like they have the last couple of days, right? And yen also gets crushed. Those are sort of the safety trades, right? That's where money flows when shit is hitting the fan, right? That's where money goes, and money is exiting those safe havens. So the way I see it, if money is flowing out of the safe haven assets, we should see a bid in the risk assets, and we have seen it, right? The Dow closed at an all-time high yesterday. Oil's been ripping. So we are seeing money flowing into those stocks and commodities. The question really boils down to, okay, some of these breadth divergences, the fact that we are making new all-time highs only in the Dow, and the Russell 2000 mid caps and micro caps are not making new highs currently. Is this a big major divergence, and the world's now going to come to an end and the Dow's going to catch up to the downside? Or are we going to get that sector rotation? Money flows back into the smaller cap names, into semis, into financials, and this bull market keeps going, right? That's the big question. Which one of those two is it, right? So that's what's going through my head. What about you guys?
Well, let's take it one step further. That I mean, it's I don't want to say it's easier to analyze charts when things are going straight up or straight down. But consolidation periods are just as important as well, as where the market's digesting the information. I know the Dow hit an all-time high yesterday. The S&P futures hit their all-time high on the Friday of the quad witch expiration. But if you look at it, we're just in a $40 trading range here. And so it's really hard to get super bearish until we take out the bottom of that range, and that the bottom of the range is 2007, and it's kind of hard to get super bullish until we break out over the 2947. So what indicators and how do you use these consolidation periods, and what would tip you one way or another, whether we're in for a correction or busting out to greener pastures?
I really think it's the rotation that we're seeing under the surface, right? I mean, that's really what it is. So we want to see, semiconductors, I think, is the prime example. We've essentially been trading in this range all year, right? So for me, semiconductors, are, if you look at the SOX, right, the Philly Semiconductor Index, we are right at those March of 2000 highs. So we've essentially gone nowhere for almost 2 decades, right? So is this consolidation that we're seeing throughout 2018 in the semiconductor stocks, right, the chips, is this, the resistance, the overhead supply from March of 2000, and we bumping into this level again, and now we roll over? Or is this year-long consolidation really just a factor of it's absorbing that very clear overhead supply from 2000, and that takes time, right? And that's perfectly normal. Is that to me, that's a normal argument. But if that argument is going to be correct, that consolidation needs to resolve higher, right? We need breakouts in the semiconductor index in order to confirm that that thesis is in fact correct. We went nowhere for 18 years, and now we're moving on. Very similar to what technology did, right? Technology broke out above its 2000 highs last year and has continued to make new all-time highs. So we need semis to do the same, in my opinion, for the market to continue. What I find super interesting is that the rotation keeps coming, right? Emerging markets were getting slaughtered. Brazil, Latin America, killed. They have absolutely been ripping over the last few weeks, along with copper and things like that. So even the worst places in the world, we've seen rotation into them. So while financials and semis, they're not going down, but they're not going up either. we need to really see money flowing into those areas. And I think that that would lead the overall market higher. And in my opinion, yen and bonds lower, right? It's that intermarket sort of approach that I think is the big one. If bonds and yen keep selling off and keep making new lows, the market's going to have an underlying bid, and so are commodities, I think.
Yeah, it's just a rotation. I mean, that's why you just seems like you very rarely just get these all-out routes in the market, because if they're pulling money from one sector, they're putting it in another sector, or they're putting in so it really, I mean, you really got to be careful. You just can't go like momentum here, because there's money flowing into stocks and out of stocks all the time. Let's talk about that breakdown in the TLT yesterday. The market, kind of shrugged off, the Fed rate increase. It was pretty much expected, but you took out a long-term major support level here in the TLT. Not good for your interest rate, sensitive stocks or whatever. What do you think of this? I know you've been, pretty good on the bond market over the years here. What do you think of this breakdown in the TLT yesterday?
It was to be expected. We've been calling for it for a while. I'm surprised it took that long, actually. It was a little bit frustrating that the breakdown took as long as it did. I figured the breakdown would come at some point in the summer, not till October, but, the market doesn't really care what JC thinks, right? But the 116 level was a big one. Guys, if we are below that, I think we have to be short bonds. I think we need to be long stocks. I'm just not convinced that we're going to be in an environment where both stocks and bonds are both selling off, and then money's just going to flow into commodities. And commodities, I think that's the much lower probability outcome. I'm in the camp that if bonds are selling off, rates are going to be ripping. I think that's good for financials. I think that's good for stocks overall. I mean, just look this morning. I realize it's early, and I hate overthinking second by second sort of ticks, but futures are down currently, and financials are up pre-market, which I think is interesting. They're up a little bit, so showing some relative strength. I think that's from the interest rates, right? Interest rates are up, bonds are down. I think that is positive for banks, and if banks are going up, I just find it difficult to find ourselves to approach the market environment like it's in some sort of crash if financials are catching a bid. I think that those are the ones that are probably going to get hurt the most, right? I just don't see that happening. Financials ripping and the rest of the market collapsing. I don't see it happening. If you really want to, if you're one of these gloom and doomers that has thought the world was coming to an end over the last several years and irresponsibly missed this beautiful bull market, I think that you want to be watching the German DAX. That to me, if you are one of these gloom and doomers that think the world is actually going to come to an end, I think this German DAX putting in this monster multi-year top, call it like a head and shoulders top, big rounding top, whatever it is you want to call it. At the end of the day, it's not, I guess you could make an argument that this is due for a major collapse. However, we have not broken down. I've been arguing that this is not a major top in the German DAX, but we're actually in the lower end of the range, right? So that's really what I would watch. 11,700, 11,800 on the German DAX. If this collapses, I think the European banks are going to get crushed. I think that will eventually lead to the United States. And I think that would make perfect sense in an environment where stocks are undergoing a massive correction, is if the German DAX completes a major topping process. I'm in the camp that is not the case. We're just in the lower end of the range, and Germany proceeds to go on and make new highs like Japan has recently, All
right, JC, questions from our chat here. I guess they're watching CMC last night because they were commenting apparently on XLV, saying it was overstretched and due for a pullback. Do you have any thoughts on XLV?
Yeah, I mean, listen, speaking of rotation, I mean, money has come into this so hard. Are we stretched? Sure. But I think that the more important point that we want to make here is that the strongest areas of healthcare have already been outperforming, right? It's the medical equipment stocks. I know everybody likes to be in the biotech and it's sexy and this and that. Forget all that. The performance has been in the medical device and equipment stocks, the IHI. That has been the big outperformer in healthcare. And sure, is the XLV overall? I mean, we're literally making all-time highs. We've gone absolutely parabolic over the last several months. So are we due for a correction in healthcare? Yeah, of course we're due. But it's not so much that we want to be shorting this sector or shorting that index. I think that the way to be in this particular market, especially in the current market environment, is in individual stocks. I learned a long time ago, if you trade the averages, you get average returns. And I think that the same can be said for sectors, like being long XLV or short XLF. Like, it's hard trading these things. I think being in individual names with well-defined risk and exponentially greater profit potential, I think is the way to do it. There are winners and losers in this market. And I think that is still going to be the case moving forward. I see no reason to suggest that anything's changed. I mean, some stocks have gotten killed. Some of these bank stocks have gotten killed over the last week. Boeing's making new all-time highs every day, right? So there's somewhere that money is flowing. And if you can be in the right places, it doesn't matter so much what the overall market is doing. If you can identify risk-reward opportunities skewed in our favor, I think that's what it is. There's stocks going up, there's stocks going down, and I think that's okay.
All right, we are on the line with J.C. Parets. He's the author of AllStarCharts. He's a great follow on Twitter as well, at AllStarCharts. J.C., let's talk about oil here. And boy, the Iranian situation lit a fire under oil here. It got near $77 just a couple days ago, trading in the red here. Talk about the impact of higher oil on the overall economy and the stock market, and also the divergence with the XLE and some of these other oil stocks and oil drillers, just serial underperformers. Is it time to maybe take a look at some of those and add it to the portfolio?
I think it's been time, particularly the explorers and producers, the XOP. That you look at that chart looks way better than the XLE, but absolutely, I think oil's going much higher. I think energy names are going to continue to do well in that environment. And I think it makes sense, Joel. I mean, think about it. If interest rates are going up, why are interest rates going up, right? They're pricing in some sort of inflationary forces, right? So if rates are going up, bonds are getting slammed. I think that is, and yen for that matter as well, I think that's positive for both stocks and commodities. I think oil continues back up to the mid 80s. I think that's where we're going for now. I think ultimately we can see $110 oil. I'm not saying that's going to happen tomorrow. I think we get into the mid 80s, $85, and then we'll reevaluate at that point. But that's been our target. That continues to be the case. That's for the record, that's the 161.8% extension of the entire decline from the 2015 peak that May down to the early 2016 lows. So $85 gives us our price target. We continue to make new highs, which is what we expected, what we hoped for. And, if you're going to look for one stock in that area, listen, you guys make fun of me how many charts I rip through on a weekly basis. I promise you guys, when you look through energy stocks and you look at all of them, and then you look at Valero, energy stock charts don't look like Valero, right? They look a lot crappier than Valero. So when I see something like that showing relative strength, not just versus its own sector, but versus the overall market, and I look at the rest of the energy complex and, they don't look like VLO, to me, I think that sets up an interesting trade. And if we're going to be in energy, I like the VLO for sure.
All right, looking at the natural gas rally along with the crude oil rally. Now, don't get mad at me, but I'm going to ask about gold here. And, with the higher commodity prices, talk of inflation, gold I know you hate the chart and everything in it, but major consolidation at the 1200. It won't go under 1,000. Really won't even get over 1220 here. Give us your the inflationary impact on the gold market and silver.
Well, Joel, I don't hate gold. They used to call me a gold bug back in the day, just to kind of just to come full circle here, right? So, I mean, not only do I not hate gold, the fact that they used to call me a gold bug, they used to call me a perma bear. I mean, these are the things I've been called. Now I'm a perma bull. I hate gold, right? So like it goes in cycles. Eventually I'll be a gold bug again. I'll be a perma bear, right? I get called silly names all the time. As far as gold, I mean, the reason that I've not wanted to participate from the long side is that it's garbage. It's absolute garbage. Stock market's making all-time highs, and these garbage gold miners are making all-time lows. I have friends in Canada and Vancouver. I have friends that are deep in the gold space. And, they're telling me that like everyone's broke. Nobody's happy. It's just misery, right? Which I think is good. I think I would chalk that up as a positive for for gold. The fact that just everyone's just miserable. I think we're close to that. Just throw in the towel. Just get me out of this garbage metal, right? I just don't think we're necessarily there yet. Can we get a squeeze in gold back up towards 1270, 1280? Sure. I think there are easier trades, Joel. I mean, listen, do I want to be short gold here? I don't. I actually like the gold miners. We've been bullish gold miners. It's been part of this whole rotation back into emerging markets, Latin America, right? These mining sort of the countries with mining exposure, and they've been ripping. So I do like the gold mining space. I think there are individual opportunities there to blindly, get out of stocks and buy gold. I don't think makes a ton of sense. But I don't want to be short. I'll tell you that.
All right, we've been on the line with JC Parets, AllStarCharts.com, also AllStarCharts on Twitter. Seriously, he rips through like charts like every 30 seconds. There's a new one up there. So
something like
check it out. He's a great follow. JC, thanks so much for the time as always. And
don't be afraid to challenge him on Twitter because he will not back down from anybody here. So JC,
listen, I'm open-minded. I love
it, JC.
I'm down for whatever.
I didn't
buy gold, short energy. I'm down for whatever. As long as it's moving, I'm in. The one thing we know is that I don't know anything, right? But neither does anybody else. So it's a fair, it's an even playing field.
All right. Have a good one, JC.
All right, bud.
All righty. 8:52, Joel. Anything interesting happening in the S&Ps in the last 20, 30 minutes?
We're crawling back.
Yeah.
We are crawling back. Still down 10 handles here. Just hanging out mid-range on the session. Mid-range on the session comes in at 29.1975. And man, I had a bunch of numbers in that area. You had a couple closes from last week in this area. You had Monday's low in this area. My weekly pivot comes in. So I'm just looking. We can be, hold this 29.20 here. I think you're not going to get to see that pre-market low, but important area. When trade 7 points below it, it's hard to say, hey, that's 5-star support here. But market trying to hold in here at the 29.20 level.
All right, let's get to some ratings this morning. And there wasn't a ton that was notable in terms of upgrades and downgrades, but we do sometimes like to look at initiations if it's a consistent note across the sector. There was one today. KeyBank initiated a bunch of restaurant stocks. I'll run through the overweights first, the ones that they say to buy, and that's Starbucks, QSR, and McDonald's, and Chipotle. So let's start with Starbucks, SBUX, and we'll run through charts of the rest of them here.
Okay, but first I make just overall comments here, and you made this comment during the pre-market show.
I did.
There has been consolidation in this sector. So if you're picking on stocks and you're to short or things like that, I mean, just keep that in the back of your mind. Started with Panera, you had Sonic. You had Buffalo Wild Wings.
All in the last year.
Yeah. So, if you're looking to pick up stuff on the cheap or where there's smoke, there's fire in the sector. So just overall, I'd have, bullish the restaurant sector. Something big like Starbucks, I don't know about
not
that.
Going to get taken out.
That's not going to get taken out. Big level for that. We're trading up 13 cents here at 55.60. Major resistance for me that comes in at 58.80, and even got a couple highs at 56 to contend with this morning. So move over 56, not much left in the 56 handle up to 56.95, and then what were the other ones?
The other one that they initiated at overweight were QSR. I just mentioned Starbucks. They gave a 60.
What's QSR? Who do they have?
That's Burger King and Tim Hortons. And as I mentioned, Starbucks, they gave a $65 price target. QSR, they gave a $68 price target here and initiated again at overweight.
Not moving. Red candle yesterday, trading near just off the low here. So if you want to pick it up here, 57.71 was the low, and the close right here at 7.86. We're trading at 58. So let's see. That also was an area of support right there at 58 back in September 18th. So there's been buyers here. I like it I like it above 58, below 58 may leak. The recent low of the move was 55.48. And what was the other one?
McDonald's. There was two more. McDonald's catches an overweight and a 185 price target.
Oh, man, 185. I don't know.
Is that street high? Let's find out.
That could be pretty close. Two red
No, it's not.
candles in a row. We're trading down 26 cents here. We're actually trading very close to the low of the session. So it's not really moving these stocks. I call area of control here is overall 164. 64.37 was yesterday's low. 64.07. That was the low on September 25th. And then you got a steep $3 drop to 161.12. So Mickey D's needing to hold the $164.
And then the last of the overweight initiations this morning from KeyBank on the restaurant stocks is Chipotle. They gave it a $500 price target.
It already traded 500.
I know.
I don't know. So they tell me it's going back there. I mean,
That's what they're saying.
Oh boy, ugly looking chart here. And someone got the party started when it was over 500. I think with the downgrade, that might have been Morgan Stanley here. Trading up 251 at 438.95. Let's see. Yesterday's hot 440. I'll call that the level. 439.99 was the high from yesterday. We have not cleared that yet in the pre-market trading. Things really open up over 440. So if you're shorting this one, be careful here. It is going to be a little bit of short covering. In fact, it would clear 440.
You might be mad that I'm going to bring this up, but I'm going to bring it up. And Barnes & Noble, because we didn't discuss it yet, do we? We talked about it a lot on the pre-market show, but not on the actual show. So BKS, they announced a process for to solicit strategic alternatives, and they're getting a pop as one does on news of strategic alternatives. But you're fading this.
This has more strategic alternatives than a cat has lives.
Right.
I'm telling you. They have been doing this since the thing was at $22. Who knows? I don't know who would want to buy them, but I think is the bookstore, the college bookstore division. I think it's
probably the only business doing well because
you have to buy the books. Well, you don't have to, but you probably should when you're in college. You got to pop up to 690. You're trading at 665. Haven't been over $7. When's the last time we were over $7 in this thing?
Cool.
Oh man, you got two monthly highs at 7 and 7 even on January. That's your yearly high, and then your December high from last year was 705. So you take out $7 here, you got to break out here in Barnes and Noble.
Yeah, and just to clarify, the pre-market show is just the name that we gave for Joel, Dennis, and I planning out the show minutes before we go on the air. But yeah. So what else was on? Let's see. I wrote down. Oh, let's do Costco because they have earnings after the bell today. So let's take a look at COST.
Okay, Costco, one of my favorite places with all the free samples. Look at this quiet consolidation here. Whew, we've been in a trading range. You made a low at 231.51. That was on September 17th, and now the top of the trading range, it's called 237.5 and kind of right in the middle. So it's going to make a big move here after earnings to see. I'd be more inclined to buy it above 237.5 and, short it below 231.50. An old pre-market prep listener is in the chat here. Lauren, Thankfulness is in the YouTube chat.
And I think so is Kenny Glick.
Kenny Glick, we got all the celebrities in our chat today.
I know.
Facebook, man, I don't know. It's just been hanging out here too long. It's got a couple major rallies, or not really made. This has been under pressure since earnings, and it just looks like it's just hanging out. 158.87. I mean, if it takes that out, you got to go. 158.67 actually was your low 2 days ago. Just from my experience with stocks, hang out, have a big decline, try and rally, then hang out near the lower end of the trading range here. It looks like some more work to do on the downside. I have not looked at Amazon in a while. Let's see how that's doing. Well, it's off the all-time high. I don't know. Kind of looks like a head and shoulders top over a head and shoulders top. So I'll be a little careful on Amazon here to the long side. And Tesla lost. I'll finish up with Tesla here. We lost that psychological $300 level. They announced the good car sales for the quarter, and it's still. I talked about 315. You did sneak up to 316.84. That was on Tuesday, but leaking again now. Got a gap to fill all the way down to 278, but it's just not going to whoosh right there. So be more interested in Tesla under 280.
All right, that is going to do it for our show today. For those of you looking for more news than just what we talk about, you should check out Benzinga Pro. It is Benzinga's real-time news platform. Perfect for anyone who wants to stay up with what's going on in the markets in the morning, during the day, and after the close. We have breaking news headlines, real-time access to press release and SEC news wires. We have an audio squawk. We have a chat room, and we now have real-time quotes, which was our most requested feature. So if you go to pro.benzinga.com, because you listen to our show and I got the hookup, if you enter the promo code AMPRO, that's Alpha Mary Papa Romeo October, AMPRO, you will get a 25% discount on the Essential Benzinga Pro package. I was told that's good till the end of the month, so the 31st. So there we go, pro.benzinga.com, promo code AMPRO. Also for our West Coast listeners, the Benzinga FinTech Summit is about a month away now, November 14th in San Francisco. If you go to bzsummit.com, and again, because I got the hookup, promo code PMP VIP, as in pre-market prep, very important person, PMP VIP, you will get a free ticket. I was told we have a small number of those available to give, and we want to hook up our show listeners. So bzsummit.com for that promo code, again, PMP VIP. And on that note, that will do it for our show. So thanks to our guest, JC Parets, for joining us today. Thank you to all those of you in our chat rooms on YouTube and premarket.benzinga.com. Hope you guys enjoyed the show, and we'll be back with you on Friday.